And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends and traders. Welcome to the market forecast. The date is Friday, January 8th, 2022. I am your host for the day. They call me JD, and this is my last day filling in for Mr. Hoagland. So again, thank you for choosing to spend your time with me this morning. Hopefully we can all walk away from this with a little more knowledge and understanding than we had before we started. Remember to hit that lucky like button. Feel free to share your comments and feedback in the chat. We appreciate that. And go ahead and subscribe to our YouTube channel so you get those updates every time we go live, if you haven't done so already. What do you say we get right into it? The June jobs report came in, beating expectations. Non-farm payrolls rising by 372,000 in June versus 265,000 expected. And the unemployment rate held steady at 3.6%, even as recession fears loom. Just looking at the markets, things are slow to react to this number, if any reaction at all even comes. But let's just continue and see what happens by the time we get to the charts. Overnight in Asia, stocks closed mostly higher. Shanghai Composite down just a little bit, 0.25%. Nikkei up a little bit, 0.1%, and the Hang Seng closed up 0.38%. Stocks in Europe are also trading mostly higher this morning, with the DAX down 0.57%. The CAC up 0.8% and the FTSE up 0.18%. Stocks in the U.S. are currently trading a little bit lower. Started kind of trading lower right after that jobs report came out. The VIX is down 1.76% to 26.29 this morning, and the 10-year Treasury yield is currently at 2.982%. I keep looking over at these charts to see what's going on. And we are getting some movement to the downside in equities this morning. Crude oil is a little lower, gold's a little lower. But let's check in on you, see who's in the room with us today. Good morning, Scott Saw, Tachyon, James Swan, Theodora, Jack Doherty, Dad, good morning, Brian, Frederico Dahl, Glitter Sandwich, Patrick, Shaw Cunningham, Denise, Sarah, Jerry's awake. Good morning, Trading Research, good morning, everybody. Thanks for joining me this morning. Glitter Sandwich says, I blew up my step 2 yesterday for no good reason. I was testing something and thought it's okay. It'll just cancel if it gets to the daily loss limit. I forgot. It blows the account. Yeah, and if you're testing something out, you have that practice account in your trading combine also. Don't be afraid to switch over if you're just playing around with a few things. It doesn't need to affect your actual trading combine if it's just a test. And you also get your free reset at the end of the month, too. So stick with it, keep practicing, and hang in there for the next one. Good morning, DA. Bron, good morning. All right, let's say we take a look at a couple charts. Let me get some queued up here. You can see my cursor this morning too, right? I realized that I had a lock on that yesterday. So we are getting a little weakness here. Well, first, here we see the it was continuing to creep higher this week. We have these 3 consecutive higher closes, but if you look down here, you see these higher closes are happening on decreasing volume. Yesterday was the lowest volume day of the week, with only 1.3 million contracts traded, and the September contract, open interest in the September contract only increased by about 700 contracts yesterday. It did trade in a 118 handle range and closed about 57 points higher, but it's this lack of volume and open interest that have me questioning the strength of these little rallies this week. We're closing in on this 50-day moving average, which is lining up nicely with the last Tuesday's high, right around that 39.50 area. This could end up being a nice pivot level if we get up there, although it looks like this positive jobs number is bringing a little initial weakness into the market this morning. So things have changed in the last few minutes here. Just a zoomed in look at this grind higher here happening. Steadily decreasing volume, as we can see. In hindsight, interest in this market was likely just weighing due to traders stepping aside until the jobs report came out this morning. Nonetheless, this 39.50 level is on my radar, and after that we have weekly kickoff high right up here at 39.95. On the downside, I would say the first stop would be to take out these lows from last week and run some stops. This was we saw some solid buying stepping in right around this 37.40 area that I mentioned earlier, that we were talking about earlier this week. I wouldn't be surprised to see some stops building up right underneath there. So here's our move after the number came out. This could be our first overnight gap of the week going into the 8:30 Central Time open today. It had been trading inside value all night long, likely just waiting for that jobs number release, like I said. And now here we are approaching yesterday's lows. Or I should say, approaching this 20-day moving average. Overall, I was just kind of waiting to see what happens, how the market reacted to this jobs number. It's, like I said, it's slow to start. Momentum is still pointing kind of higher. We're trading above those shorter-term moving averages right now, in between the 20 and 50-day moving average. But it's a little weak to start the morning. So just going to keep waiting to see what happens with this in the next half hour or so. Let's move on to crude oil. So, well, I said yesterday that it would take a close back above weekly kickoff low to convince me that this market wasn't extremely weak right now. And that's what happened. I was not prepared to put on a long position in crude yesterday, and here we are about to test the 10-day moving average here. Yesterday's rally did come on the lightest volume of the week, and the August contract did lose about 17,000 in open interest, but I would say that's likely due to next week's roll. And yes, just a reminder, crude oil futures roll to the September contract next week, so make a note of that for yourself. Just checking in on something. Okay, we're all good. For a second there, I thought my volume was off. Okay, continuing on. So here's the 4-hour chart. So you can see that Wednesday's high was taken out without a problem yesterday. And now we're just kind of dancing along this weekly kickoff low. Volume's clearly drying up. These shorter-term moving averages have not crossed each other, but personally my sentiment has shifted from bearish to neutral for the time being, just for the moment. A little sideways action overnight. Look at that. You know, I was playing around with these profiles yesterday, and now they're missing the opening bar in the crude oil contract. I'm going to have to go back and fix that. But anyway, all week long we've been getting this big move right on the 8 o'clock Central Time open. It's the same scenario every day this week. Trading inside value all night long, and then this kind of violent one-directional move as soon as the bell rings. And the same scenario is playing out right now. Here's a continuation chart. Overall, as I said, my sentiment has shifted from bearish to neutral for right now. I want to see what direction the move will be after the bell before I think about putting on a trade here. But so far, hanging out above weekly kickoff low. This 02 to 04 level seems to be an area of congestion for the moment. So we'll just have to wait and see what direction we break out to. Next step on the downside would be to take out Wednesday's lows. And to the upside, back up to this 20-day moving average, I would assume. let's move over to the NASDAQ. So the NASDAQ has made it up to its 50-day moving average here. You can also see the same volume pattern as the ES, sort of decreasing, 3 consecutive closes, higher closes on decreasing volume. Yesterday was also the weakest volume day of the week, with about 545,000 contracts traded. The September contract picked up about 2,400 in open interest. Momentum still pointing higher, and this 10-day moving average looks ready to cross above the 20-day. But as I said with the ES, it's this lack of volume and open interest that have me kind of second-guessing this little move higher right now. Here's our 4-hour. So I think the objective for today would be... Initially, I thought the objective for today would be to test this weekly kickoff high right here at about 12,300 and run some stops. The job number looked good, and I was thinking maybe we'd see a pop out of it. Initially, though, we are being dragged down just a bit. We also saw a little weakness overnight, but I think we could chalk that up to traders just kind of stepping out of the way for the moment, waiting for that jobs number to come out. Also, we have this nice rounded bottom here, possibly setting up a cup and handle pattern. We're still missing the handle, kind of forming it right now, actually. But this is historically a pretty bullish pattern setting up. Here's our 30-minute. We see overnight trading relatively flat until just now, or a few minutes ago, when the jobs report came out. Again, slow to react. It took about 15 minutes for sellers to start stepping in, but we're heading closer to yesterday's regular trading hours low. So that'll be our first target to the downside. Overall, while momentum is pointing to higher prices, it's looking just a little bit weak this morning. My upside targets are this high from last Monday. Oh, let me switch over to continuation chart. My upside targets would be this high from last Monday and our weekly kickoff high, which are only about 40 points apart here. After that, it's off to test these highs from early June at the 12,900 area. But if we're going to continue to the downside, I keep switching over, then I think a test of yesterday's Globex low and possibly a test of these would line up pretty much dead on with these shorter term moving averages. So those would be the two targets I'm looking at on both sides of the market today. Over to gold. This one just really fell flat yesterday. It was held to just a $14 range, only 146,000 contracts traded, and the August contract lost nearly 9,000 in open interest. Now gold doesn't roll until the end of the month, I think around the 28th, if I'm not mistaken. So this drop in open interest is really just positions being liquidated. Like all the other markets we looked at this morning, we see volume steadily decreasing here throughout the week. This market looks weak to me still, but it's possible maybe it could be looking for a bottom. Let's see if the 4-hour tells us anything different. So this chart is painting a bit of a different picture for me. We saw prices hugging along this 10-period moving average as it continues to slope downward. These high volume spikes that were from earlier this week have been coming on pretty significant down moves during regular trading hours, and then volume kind of drives up during these consolidation periods. So while the daily chart looks like it might possibly be looking for a short-term bottom, this 4-hour chart is telling me that it's possible this market's setting up for another leg lower. We just took out this low from Wednesday a few minutes ago, tested it overnight, couldn't quite do it, just took it out now, and now rallying back up to the settlement of this bar, about to test that 10-period moving average again. Whoop, I just closed it out. Didn't mean to do that. So after a nice textbook inside day yesterday, it literally spent the whole day trading inside Wednesday's value area. Overnight inventory was a little mixed until a few minutes ago. It looked like just maybe blew out some stops below yesterday's low, possibly. Right back up to inside yesterday's value area. Overall, like I said, another leg lower in the next couple days would not surprise me at all in this market. But for right now, it's just kind of laying flat. With that, we'll keep it nice and short and sweet today. We'll check back in on the chat and see how everybody's doing. Epic Tetsu says, at least you should only have to restart step 2. Good point. Good morning, good morning. Sorry, just reading through the chat here. Am I using the desktop flavor? On this computer, no, I'm using the web version. On my other computer, I have the desktop version. Today we are using the web version though. Glitter Sandwich, grateful for the community. We do have an excellent community, don't we? Let me switch back over, get these charts out of the way. Six 5 Yanks, go Yanks. Who are the Yanks playing? All right, if there's nothing else, just one last thing. Oh, well, that's it for me, folks. Thanks for hanging in there with me this week. I certainly enjoyed being here. Our guy, John Hogan, will be returning on Monday, so we'll get things back to normal for you with group coaching and Make Hogue Money sessions. Other than that, I don't see any questions pouring into the chat, so I will give you the rest of the time back to prepare for the equity open. So with that, everybody, take care, trade well, and have a great weekend. And I'll catch you all next week on the Coach's Playbook or something like that. All right, everyone. Thank you for being here. I appreciate you all. Have a great day.